The stock market has a lot of flashing warning signals. However, is this time different? Are we about to go to new all-time highs, or is the stock market correction about to get underway? Now, the first thing that we see flying all around the internet is going to be the Hindenburg Omen stock market crash signal. Now, I know it sounds scary like that article says. However, we've seen in the past where that signal has not necessarily played out. 2015, when it fired off, market went kind of sideways, finally went down months and months later. But what about 2014? Small little dip after that, not much. And it has in the past also signaled the market has come down substantially, like we saw right here in 2020. Even in 2022, when we've seen a cluster of them towards the end of the year, we got that nice little healthy 20-ish% pullback. However, one warning signal by itself just simply is not enough. But what does start to make this warning signal a little bit interesting, if we come right over here and we look at the NYC Composite Index, what do we have? We have the MACD indicator down here at the bottom. And right up here, if we look at a basic chart pattern, top number one, top number two, and look at what we have with the MACD indicator. Let me just make this a little bit larger. Can we see that the MACD indicator up here at these highs is doing what? It is making lower highs. This is going to be another warning sign to watch out for. Now, this is not only in the NYSE. If we come over and look at Meta recently had earnings out. What do we see? Before Meta has really started to drop, notice also on the MACD indicator, where are the peaks aligned? Are they peaks making higher highs, or are they making lower lows? And I think we can clearly see that. If we simply draw a trend line across some of these peaks, are they going higher or are they going lower? We can clearly see they're going lower. So is it really any surprise that Meta is heading back down? Now, something else I find kind of suspicious out here, if we look at the QQQs, Qs right near all-time highs. And when we come over and we look on Friday, the Qs were actually up $3.02. But then we come over and look at the fear and greed index, we have a reading of 35. We are still over into fear territory. So as the market is over here at all-time highs, what are people fearful of? Why, oh why is the fear and greed index at such a low reading? If we come over here and we look at the market momentum, well, we're still over in greed. We look at stock price strength. Well, we see a little bit of fear out there with that. Stock price breadth, and I think that's going to be the main story out here, is really the fact that the stock market breadth is just horrible at this moment. Put call ratio, basically neutral. Market volatility, neutral. Safe haven demand, extreme fear, along with junk bonds, showing extreme fear in the stock market. Now, this past week, we did get the most recent investor sentiment survey, and we can see the bulls stepped up once again. So now this is the second consecutive week where we're seeing the bullish side actually go up a little bit higher. This week, we had a reading of 44. The prior reading was 36. The week before that was 33.7. We can also see the bears drop down a bit to 36.9 from the prior reading of 42.7. In the week before that, 46.1. Now, I do want to caution you guys with any stock market warning signal, keep in mind, seasonality wise, we're going to be in a very bullish period of time for the stock market. Now, we come over and look at the next stock market warning. This one's going to be brought to us courtesy of Michael Burry. However, this is not as doom and gloom as you may think. But Michael Burry basically came out with a Twitter post, says sometimes the only winning move is not to play, says Michael Burry in bubble warning. And right down here, if we scroll down, we can actually see his Twitter post. Sometimes we see a bubble. Sometimes there is something to do about it. Sometimes the only winning move is not to play. And the reason why he's probably talking about this, we know when bubbles really start to get blown up, like we saw during the dot-com bubble burst, things can get crazy, out of control, valuations off the charts, and it could take a little bit of time before the markets finally start to pull back here just a bit. But what if I told you it's not just Michael Burry sounding the warning alarms out here? Then we come over and look at one of the best investors of all time, Mr. Warren Buffett, keeps selling stocks. And if we scroll down here, right here, we can see that Buffett is a net seller. We can see stock sales exceeded stock purchases by $6 billion. Now, that might not sound like a whole lot, but we all know that Warren Buffett is a very good investor looking for value in the market. And then this article sums it up very well. Berkshire's cash pile hits a record $382 billion amid continued stock sales. And look at this chart real quick. Warren Buffett has just been selling, and selling some more. And again, if Warren Buffett thought the stock market was fairly valued or there was good deals in the stock market, we know that Warren Buffett would be putting that cash to work, trying to get a higher return on the money than basically just sitting on a pile of cash. Now we come over and look at a chart of the Qs real quick. Notice the Qs right near all-time highs. We look at the Dow Jones right up near all-time highs. We look at the S&P 500 also near all-time highs. And guess what? All three of the indices were actually in the green on Friday. But with all the indices in the green, we come over and look at the volatility index. Notice the VIX was also in the green. The VIX was up 3.14%. If we look at the VIX real quick on the 5-minute chart, we can see the VIX did pull off the highs a little bit. The high on the VIX was right here about 18.55. And again, somebody is a little bit nervous about something. Is it the fact the government shut down and is starting to affect air traffic control? Maybe SNAP benefits and other things that could really start to wreak havoc out here on the stock market. Well, something that's going to throw a little bit more uncertainty out there. This Friday, we're supposed to be getting that NFP non-farm employment numbers, but guess what? With the government being shut down, you guessed it, this is going to be another time where we do not get any numbers. We come right down here on the calendar. They did not even attempt to put it on the calendar, assuming the government's going to be shut down, or with the fact that the government's been shut down, are they not going to be able to give us that data? Now, something I found very suspicious out here, if we go back and look in October, keep in mind, we were supposed to get the CPI report on the 15th. We did not. Instead, we got the CPI report on the 24th. And guess what? The CPI report happened to be better than expected. So how were they able to get the CPI report out which was originally slated to be released on the 15th? They were able to get out on the 24th. But why were we not able to get the jobs number out? Keep in mind, if we look at the last NFP number that we had out, what do we have? We saw that we only created 22,000 new jobs. And if we expand this out here just a little bit, we can see how the labor market has been weakening. July report, we came in at 147,000. The August report, 73,000. And then the September report showed only 22,000 jobs. So would the jobs report actually reported potentially a negative jobs number? Now, as we do come out here and look this week, keep in mind, we do have ISM numbers coming out on Monday. On Tuesday, I don't think we're going to be getting the JOLTS job openings coming out. However, on Wednesday, I do think there's a good shot we're going to get the ADP non-farm employment numbers, but we know this number can vary drastically from the NFP numbers. So maybe this is causing traders and investors to be a little bit worried. Now, if all of that wasn't bad enough, the Fed is about to start boosting financial markets again, and here's why. Now, they say the Fed is about to. Now, if you guys listen to Jerome Powell during his press conference, he said by December, they were going to stop the quantitative tightening and potentially, and he didn't explicitly say this, but basically say they're going to start QE once again. Well, if we come right over here and we look, we can see the Fed quietly signaling trouble ahead. Powell injects $29.4 billion into the banking system, the biggest repo operation since 2020, as U.S. bank reserves crashed to $2.8 trillion. Now, let's look at this chart real quick. We can see a couple of blips where the Fed has injected in the past. We can see in June we had a little bit of a blip, but look right up here. This is one of the largest injections that we have seen on this entire chart, going all the way back to 2007. And keep in mind, the Fed would not be doing this if everything was fine out there in the economy. Now, I do want to bring to your guys' attention right now, My Fund of Futures has an amazing sale. You can get the 50K core account for only $59, and that includes the Flex add-on. Take advantage of this offer. Use the link in the description box down below. Use code Mike at checkout. So with Powell injecting $29.4 billion in the banking system, let's come over and take a look at the financial real quick. XLF, well, we can clearly see up here as we've had this consolidation, what has the MACD indicator been doing? In all reality, ever since this peak right over here, the MACD indicator has been putting in a series of lower highs. Then when we also come over and look, we are also below the zero line within the MACD indicator. But wait, if we're going to see a problem in the banking sector, it's really probably going to come from KRE with all the bad loans. And we can see once again, huge MACD divergence. If we simply grab a trend line and just connect the highs, we can see as KRE pushed above the previous high, what was the MACD indicator doing? It was giving us a clear warning sign that watch out, there could be trouble up ahead. And now we have seen KRE come down here just a bit. Now, jumping back over and looking at XLF real quick, we can see that on Friday, XLF actually closed up 14 cents at a price point of 52.37. Now we come over, look at the gamma exposure chart real quick. Notice right over here, we have a lot of gamma exposure right up here at a price point of 55. Keep in mind, we closed at 52. And look what we have down here, right at 52, a lot of gamma. We're below this big gamma right over here. And we have a lot more gamma right down here at the 50 price point. Keep in mind, right now, the XLF is in negative gamma, which could also lead to lower price. Now, if we come down and look at 50, 50 really isn't that low, but if we do go down there, that would be enough to go ahead and break this low. And as we can see, we're putting in lower highs along with lower lows. So these are all signals we do not necessarily want to just simply ignore. We see right here, Starbucks can't get customers to stay. If we come over and look at Starbucks chart real quick, Starbucks had earnings out last week, and we look at Starbucks, yikes, on the daily chart, looking horrible. If we actually go ahead and look from all-time highs to where we're currently at in Starbucks, Starbucks is down roughly 36%. Now, we've had this larger ABC pattern in play, which would bring Starbucks down to about 57. But then we look, we also have a new A to B equals C to D pattern starting to develop. Now, for that, what we'll do is grab a Fibonacci extension tool, measure from the high right down here to the low and back up here to the high. Now, the price completion on that would be right down here about 56.67. So definitely something we want to keep an eye on. Now, we come over and look at the Dow Jones versus the Transportation Index. Dow Jones chart on top, Transportation Index chart on the bottom. And what do we have? Well, we have been making a series of lower highs. Is that about to change? You can see right now, we're threatening being able to break this declining trend line. However, we look at the price chart real quick. That is a very bearish weekly candle that we're seeing out here on the Dow. We basically have a shooting star type of candle. We gapped up last week. We have failed to come back and fill that gap, at least at this point in time. But then we come over and look at the SPY versus HYG, and we have a huge divergence. So Dow versus Transportation Index looks like it's trying to firm up just a bit. But then we come over and look at the SPY and look at HYG down here at the bottom. HYG just simply peeling off the high. Before the SPY actually made new all-time highs, HYG was saying, uh-oh, not so quick. Let's go ahead and start going a bit lower. However, HYG has not taken out a low, and we have not started to put in a lower high just yet, but that could be just right around the corner. So now that we've completed another month out there, we can see that we've had 1, 2, 3, 4, 5, 6 consecutive up months in a row. And now we look at the MACD indicator on the monthly chart. It is at the highest point, at least at this point in time. However, are we due for a pullback? I would say yes. Does it mean we're going to get a pullback? Absolutely not. Then we come over and we start looking right here at the weekly time frame. And notice this is where things start to change just a bit. Look at the candle. This looks drastically different than the monthly chart I just showed you guys moments ago. Keep in mind, the monthly chart, we closed near the upper end of the range. On the weekly chart, we have a wick on the top and a small body, and we closed in the lower third of the range. MACD indicator does have a bullish cross at this point in time, but pay attention on the composite profile. The next high volume area is going to be here about 662.34. And then down here, then I really like this area right down here, anywhere from 605 down here to about 588. Now, if we were just to go ahead and measure from here, from all-time high down to the first high volume area, that's going to be about 3.92%. Down towards this next area, that'd be about 11 down to about 15% decline in the market. And as we're in a very bullish period of time in the market, I don't know that we're gonna make it down there just yet. Now, what I do want to be on the lookout for this week, we noticed this week when we did get the pullback off the high, basically confirming that hanging man candle, we came down to the 38% retracement, the market bounced. Now, that is what I talk about all the time. Normally, when we come down to a 38% retracement, it'll either cause the market to pause a little bit or get a little bit of a bounce. Now, what I want to be on the lookout for this week, do we end up producing a lower high in the market and then start to work our way on the way back down? Keep in mind, we have several gaps right below us that still need to come back and get filled. Then as we look on the daily profile, notice we do have a high volume area right here about 671.91, 671.97, which would also correlate right around where this last gap up would go back and get filled. When I say last gap, we had 1, 2, 3, 4 days where we gapped up, and we have just now started to try to fill in some of those gaps. We come over and look at the 4-hour chart. We just barely started to get a MACD cross out here. Then over here on the 30-minute chart, notice we have overlapping volume profiles, And as we look at this, that last 30-minute candle did not look all that bullish, kind of a bearish engulfing candle. But I do want to caution you guys, when we look down here at the MACD indicator on the 30-minute chart, notice we are below the zero line, and we'll look for signs that we start to firm up here just a bit. Now, if we're trading above value area high come Monday, watch out. We're probably going to go substantially higher. And I want to be on the lookout from that point on. Are we going to make a lower high or a potential new all-time high in the stock market? Now we come over, look at SPY. We have now re-entered negative gamma in the market. We can see right over here. And as we come over, look at the gamma exposure chart. What do we have going on? Well, we have a lot of positive gamma right around that 700, 701 strike price. But then look right down here below us. The white line basically signals exactly where the market closed. And then if we start getting below this yellow line, 679, this is a point where we can expect volatility in the market. And if that's going to take place, we're probably going to come down towards some of these higher gamma levels. Now, to the downside, 670 would be a point of interest to me. Now, if we come back over and we look at this, where would 670 actually come into play? Well, if we notice, 670 would be right down here, just below that high volume area, and that would be enough to fill in some of these gaps. So that's most certainly something I do want to be paying close attention to. Now we come over, look at the futures markets real quick. Starting off, look at the weekly volume profiles on the 4-hour chart. Now notice we close right near value area low. That's going to come in at a price point of 68.75. Keep in mind, we have the point of control at 68.95 and a quarter, and value area high is going to be right up here at 69.20.25. Now, as long as we're above value area low, I want to look for the market to target the point of control and to see, can we make it all the way up here towards value area high? However, let's not forget, look left. What do we have right over here? Well, we have an unfilled gap from last week, and we also have that untested value area high. Now, keep in mind, the untested value area high, whenever we close above it, which we did the prior week, that signals that the next 1 to 2 sessions, and since we're dealing with a weekly volume profile level, we expect the next 1 to 2 weeks we'll come back and visit that level. Well, last week we did not make it down here to fill the gap, nor to come down here and test out value area high at 67.85.50. So that means this week there's a high probability the market will make it down there. And let's not forget, if we breach that level, we still have an untested point of control at 67.74. However, I do not want to focus on these lower levels as long as we are above value area low from last week. This is going to be my line in the sand. If we're above it, I want to look for higher prices. If we are below it, I want to continue to look for lower prices. Now, we come over, look at the daily profiles on the 30-minute chart. We're also closing right near value area low. 68.88.75 will be value area low. If we're trading above that, I want to look for higher prices. Now, keep in mind, the point of control is very close towards value area high. Point of control is 68.95.75, with value area high being 68.97.25. Now, normally I want to look for the market to retest the point of control as target number 1. However, since it's so lopsided close towards value area high, instead, I want to pick off one of these high volume nodes as a potential target. So as long as we're above value area low, I want to look to target this high volume node at about 68.81.75. In the event we go below value area low, then I kind of want to target this minus development area, 68.57 and a quarter. Then down here towards the candle bodies, 68.50. Then see, can we run the lows from Friday at about 68.43? Anything below 68.43, then you guessed it, I want to go all the way down here for the gap to be filled, that untested value area high and that untested point of control. If we breach through that area, then I like this next high volume area about 67.15.75. Now we look at the gamma exposures for the S&P futures. Notice right down here, right around 6,700, we have a lot of gamma exposure to the downside. However, look above us, we have a lot of gamma exposure, and really one of the highest level, one of the areas I'm really going to be attracted to if the market starts breaking out to the upside is going to be right up here at 71.25. But let's take a look at both of these levels real quick. We can see if we look at where that 6,700 price point would come in, notice that is right here, right in this little valley in between these two high volume areas. And that would be enough to not only fill the gap, take out value area high and the point of control. But if we start breaking above all-time highs, 71.25 could be in the cards. Let me know in the comment section down below. Do you guys think we are going to break all-time highs? hitting 71.25 this next week? Or do you think we have a better shot of coming down towards 6,700? Also, let's not forget, we are in the midst of earnings season. A lot of people are going to be looking at Palantir, Uber, AMD, Super Microcomputers, Robinhood, McDonald's, just to name a few. And we come over and look at the big expected movers out there. Palantir plus or minus 10%, Shopify plus or minus 11.5%, AMD plus or minus 9%, Uber plus or minus 8% or so. So Palantir on Friday was able to make a new all-time high, and we'll see, will that 10% move on Monday be to the upside or be all the way to the downside? Now, as we come over and look at the QQQs real quick, let's start off looking at the monthly time frame since we just completed a full month. Notice we've had 1, 2, 3, 4, 5, 6, 7 consecutive up months in a row. That is one heck of a move. We do not have any type of MACD divergence on the monthly chart, and you can actually see that we're closing in the upper third of that candle. Now, if we come down and start looking at the weekly chart real quick, notice we had kind of a shooting star type of candle. Last week we gapped up, and this has been very impressive. If you actually go ahead and measure all the way from the lows on April right up here to all-time highs last week, we have the QQQs up 58%. And on the weekly chart, there really has not been any type of pullback. Now we come down and start looking at the daily chart real quick. Notice we had this hanging man candle up here. We confirmed it. And then on Friday, we tried to push back up. However, we failed to make a new high. Doesn't mean next week we won't be able to make a new all-time high. Then we look, we have a lot of gaps down here below us. Are we going to be able to come back and potentially fill in some of those gaps? On the 4-hour chart, MACD indicator is just about to cross to the downside. But then as we look at the 30-minute volume profiles, notice we are down below the zero line. MACD indicator basically flattened out. So is this the calm before the storm and the market's getting ready to break and make new all-time highs? Or are we about to go lower? Because as we look at this on the 30-minute chart, this has the potential for an A to B equals C to D pattern on the way down. I know it's not much. Price target on that would be down here about 624.80. And that would bring us right in the ballpark of this gap support right over here. But if we really start getting to that gap, watch out, that gap's likely to come back and get filled at 617.06. Now we come over and look at the gamma exposure chart real quick. We can see it close right around 629 or so. And look, we have a lot of gamma exposure above us. We have call resistance right up here about 650, but also to the downside, we have quite a bit of gamma exposure as well. To the downside, right around 590 or so. So let's look, 590 and right around 650. So if we look at 590 would be way down here, right back to that low, right near the lows of that nasty Friday that we had. However, 650 would be enough to make another new all-time high. Now we come over and look at the futures markets real quick. Let's take a look at the weekly volume profiles. You can see we're closing right near value area low, which will be 25,959.75. We have the point of control, 26,070.25. Value area high, 26,251.75. Now, in the event that we're trading above value area low, I want to target this point of control, 26,070. We break above that, I want to target value area high, and then I want to see, can we target all-time highs? In the event we're trading below value area low, I want to target gap support from last week, 25,691-ish. Then down here for the gap to be filled, right here out, 25,508. Then can we come back and test that untested value area high, untested point of control, and maybe even work our way down towards the high volume node at about 24,834. Now, when we come over, we start looking at the daily profiles on the 30-minute chart. Notice we have a lot of minus development areas in this chart, and this is going to be important, especially as we go to trade out here on Sunday night. Now, first time we come into the minus development area, we'd expect the market to either consolidate or potentially pull back. However, since we already came up here late in the day on Friday, was this the first test where we overshot it, we rejected back down, and there is a little intraday pattern we can watch out for. We have the A to B, B to C, and we project up here for D. So if we're able to start coming up towards the highs of this candle and we break that high, that opens the door to 26,195.93. Now, as we look at the volume profile levels, we are trading below value area low at 26,007.50. In the event we break above that, I want to target right back in this minus development area, 26,048. We breach above that, I want to target this high volume area of the profile, 26,095. Then I want to target right here, right within this little secondary minus development area, and this candle wick right down here, 26,142, and then the point of control, 26,160, and then value area high. Anything above value area high, I'm looking for the highs of Friday to be rerun. And then from that point on, we're probably going to see the market running up, trying to make another new all-time high. Now, if you guys like to learn about my fund and futures new payout policy update, then you want to make sure to check out this next video right here.